So once again, welcome you all to Target Professional Consults, Financial Reporting, ACIB. Today I'm going to look at for preparation and presentation of financial statements. So kindly do yourself comfortably and let us do it together. Okay, so let's see. We call it preparation and presentation of financial statement. Please and please again, as usual, no shortcut in exams. Okay. Preparation and presentation of financial statements. So we are going to start introducing ourselves to how to prepare a basic set of financial statements. Most often, this is the integral part of the paper, and it's a part that normally worries a lot. So let's take note of this. Okay. So let's start. Now you're going to prepare the financial statement according to two regulatory frameworks or two legal and regulatory framework. So here I'm going to prepare it according to number one, the regulatory, the Companies Act 2019 Act what? 992. Again, they are going to prepare this according to International Financial Reporting Standards. Good. So that is the game. We are going to prepare the financial statements in accordance with the Companies Act and then the IFRSs. So don't be surprised when the examiner himself quotes it in the requirement. Tell him that you are aware that the financial statement you are going to prepare it with what? In accordance with the IFRSs and then the company's code. Great. Okay, now what happened is this. The company's codes mandate us on how we should prepare a financial statement. The company's code mandates us on how we should prepare what? A financial statement. And the IFRS give us a specific treatment. Especially, we are going to look out for IAS 1. It talks about preparation and presentation of financial statements. So IAS 1. So you're going to look at IAS 1 and the company's code. These are the two regulatory bodies. Good. So that is that. The IFRSs will tell us specific treatment of transactions. Specific what? Treatment. If you're preparing a financial statement. And then the company's code or the act will give you the legal backing. The legal backing. That is all. And also specify the account that you need to prepare. So in Ghana, our Companies Act, the fourth schedule, spells out all the accounts that need to be prepared, and then the manner that we should prepare them. That is all. So now let's go straight to the point. Let's go straight to the point. So we are going to familiar ourselves to the format prescribed, and then we move on. So now help me present the format together. Good. Now let's go to the component of financial statement. What we are going to prepare. The component. So component of financial statement or financial report. Component of financial report. So a complete set of financial report or financial statement should have the following set of what formation. So that examiner that there are 5 components. A, we call it comprehensive income. Comprehensive income. Comprehensive income. That is a profit or loss or the trading profit or loss account to just exhibit the performance of what the entity. We use that to assess the performance of the entity. Yes. The next statement that we are going to prepare is called statement of what changes in equity. All of them come with a word statement of. This one becomes statement of changes in equity. Changes in equity. We go to C, Almighty. Statement of what? Financial position. Statement of financial position. Let's go to statement number 4. Statement of cash flows. Cash flows. Let's go to the last statement. The last statement is what? Notes. Notes to the account. So notes to the account. That is all. Now, for the purpose of your examination, the notes are your workings. Clearly show all the workings, how you arrive at the figures. That is all. Now, this is the set. The first 3, one set, 20 marks. And then the D is on its own, also 20 marks. All of them come with a note because all of them you need the workings. You must show workings how you arrive at the figures in the financial statement. So kindly take notes of that. Okay. So these are the financial statements that we are going to prepare together. Yes, together. Now we are going to familiar ourselves with the format of this, the comprehensive income and change in equity and then the financial position. We have to familiar ourselves with it. So that is what we are going to look at for now. Good. We'll look at them one after the other. First, I will concentrate on the first 3. Comprehensive income, changes in equity, and the financial position. That is what we are going to concentrate on. So right after these 3, when you become perfect, then we graduate to that of the cash flows and finally move on. Good. And finally move on. Okay. So let's see. Let's go straight to the point. Now the comprehensive income, it takes your performance. Change in equity shows the effect on equity. Financial position gives you the financial stand. Cash flow stipulates or states the cash flows, the movement of cash in and out of the organization. Basically, that is the financial statement. The notes are your workings. You will show all workings, how you arrive at the figures in your financial statement. Tell us. Okay. Because when I prepare the financial statement, as usual, you're not there. So that is it. Okay. So let's start with the game. First of all, there was something called the 3 protocols. 3 protocols. Don't forget about them. Before we start any final account, make sure that those 3 protocols are in place. In fact, that is what we mark first. First of all, tell the examiner that the name of the company, so name of the company, they'll tell you. Sometimes very funny. Don't mind us with the funny names. So the name of the company should be on top first. The name of the company, the name of the company. The name of the company should be on top. Atrasika Limited, Maya Limited, Work Hard Limited, Suffer to Gain, Success Limited, Dama Kunde, and so on. These names are sometimes funny, but what can you do? Exactly. So the name of the company should come and write it nicely, and then the heading, the requirement. The three protocols are: one, the name of the company. Number two, the requirement. Number three, requirement means the heading. Heading. Put them under appropriate heading. Other than that, we will mismatch the marks too. Oh yes, if we swap the heading, we must also swap what? The marks. And then finally, tell us the reporting currency. Reporting currency. If it's in dollars, cedis, yen, and co, and we report it in. That is all. So here the requirement will be like this. Just summarize question. Now write some heading on the board. Kindly select one. How the examiner will go to the same way, we must pick it. So we have what you call statement. We have statement of comprehensive income. Comprehensive income for the year ended. Then you got the date. Maybe 31st December 2020 or 30th September 2020. You can also write it in full like this: 30th September 2020. Okay. So take note of this. This one is something that it is free. It's like freedom. I mean, right to live. This is a right to live, right to pass the exams. It's free of charge. Don't need to do anything. In fact, even some of the rights are not free. Before you can enjoy the right, you have to also probably know your responsibility first. You can enjoy the right. But here there's no responsibility. Enjoy it for free. Good. Reporting currency. So at your right corner there, put your reporting currency. Check for the question. Sometimes some of the examiners will raise 3 zeros, meaning they are working in thousands. Kindly raise it. If you have not raised the 3 zeros, please don't worry yourself and raise it. If they've not raised it, don't raise it until the figures are too extra large. So take note. Now, the heading, there's a long approach. This is a shortcut. The long approach is, I write a long version for you. Just that your examiner may use the shortcut. Or it's like this. We call it statement of profit or loss. Statement of profit or loss and other comprehensive income. Other comprehensive income for the year ended, or year ending year ended, then the date continued. So either this or this. This one, don't need to worry about it because the examiner will put it in the question. So you're just summarizing what you see in a question. If the examiner asks for statement of comprehensive income, I just copy the same thing for you. Statement of comprehensive income. I'm done. If the examiner wants statement of profit or loss and other comprehensive income, why not? I will write it for you. Then it means that we can also have a third version. The third version is like this. Statement of profit or loss. Amazing. For the year ended. Amazing. So this is the number 1, number 2, and number 3. Any of them, you are free to go. So just look at the question. The one the examiner will quote the same thing. Because Fred will tell you that, or Target will tell you that. Solution to every question is a question itself. But not what we know. No, not at all. Don't lead the question. Let the question lead you. Other than that, in fact, you run past the question. So that is it. So kindly take note of this. The one examiner could just put the same thing for him. Okay, so basically, that is that. Basically, that is the game. Okay, now let's move on with the format. I believe now the heading is no big deal. So let's go to the format itself. Now, this comprehensive income, the format must be part of us. It's not something that we need to probably worry about. It must be part of us. You start by saying your sales revenue. Sales revenue. You start from your sales revenue. So much. It's also called net sales or turnover. Net sales or turnover. So much sales revenue. That examiner less what? Cost of sales. Cost of sales. Good. If you take the cost of sales out, tell the examiner that the net answer is called my profit, which is gross. It is a direct profit. Accountant calls the direct profit as what? Gross profit. Good. So this becomes the gross profit. It is gross because it's not less some expenditures from it. So gross profit like this. Okay. So take note of this particular one, and then we are again. Okay, so from gross profit, there are a number of versions. So as and when we start solving questions, I'll probably walk you through some 3 versions of this. So from here, this is a direct revenue. Sales is a direct revenue or direct income. Then you subtract direct cost to give you direct profit. The accountant called the direct profit what? Gross profit. It's gross because they have not subtracted all the expenses yet. They will soon subtract an expenses again. So that's why they call it gross. No, gross amount are like big. This profit is a gross profit because certain expenses have not been subtracted or not subtracted all the expenses, yet to subtract some of the expenses. That is why we call it the gross profit. Then the next line, please, this one I don't write. I'll probably allow you to write a certain one. You're supposed to write here general and admin expenses, maybe so much. Then you come here, selling and distribution expenses, also so much. Then you subtract it. This is what you're supposed to do. But there's a danger. The danger is that we, in attempt to group all the expenses, they'll give you some expenses, and it is your responsibility, show responsibility in exam room to group all the expenses under these two headings: general administrative expenses and what? Selling and distribution costs. Now the danger is that maybe after your grouping, you have something like 30, 40. So that means the total is what? 70. In fact, in actual fact, here must be 20, and here is what? 50, giving us still the same 70. So here, it normally pains me when it happens that way, that you get these answers wrong individually, but this answer will be correct. Their total is correct. Why? Because certain expenses, if you're confused or probably you might not be in the right mood to determine whether you should go to general administrative expenses or the selling and distribution. So why can't we apply or go in for a comprehensive insurance? So let's take insurance. Insurance are in there to probably help us recover losses. So let's take insurance. The insurance is that, why can't we go and then prepare a workings and combine these costs together as one? Because if when I sum my individual wrong figures, I'm getting 70. When I sum the correct one, I'm getting 70. So this insurance cover, it's comprehensive, cover everything. So just to show workings, prepare working somewhere, bring only one final figure in here. So at the end of the day, you will arrive at what? Just one figure. Called it has admin and distribution costs, or you can also call it operating cost. So that is the method or the approach that I've adopted, yes, to save. Right? Go and then probably the items are too easy, too common to demarcate it between admin and distribution. Why not? Go ahead and separate them. But where there's a certain expense, you don't know whether it should be admin or distribution, or it must be a portion shared between these two departments. And there's no rate to be shared, so you don't know how to treat such transaction. Don't worry yourself. Just start examining what the insurance cover. So that you will probably this is what I'll do. Perform a workings where you have combined all the expenses together, both admin and then distribution costs, and call it operating costs. So let's operating cost. So this operating cost is a combination of what? Admin plus the distribution cost together, all of them. Here you are afraid that probably a particular expense, in fact, you are comfortably saying it is admin. In actual sense, it's supposed to be your distribution cost, which would then make your admin wrong and distribution also wrong. But in effect, their total answer, you got it right. So something like that is very painful. So there must be an alternative solution, and that's why I adopt this. So in exams, you can just call it operating expenses, or you can also call it selling and distribution costs or admin expenses. Do that, and then you are fine. Do that, and then you are fine. Good. So basically, that is that. Okay, so let's see. After taking it off, let's call it operating profit. This is called operating what? Profit. So much. Then you add other income to it. Other income. Other income you add. It will give you one of the interesting profits. We call it profit before interest and tax. Profit before interest and tax. So that's the profit. Okay. So that is that. This profit that we have determined is before what? Interest and tax. That is that. Before interest and tax. This profit is before interest and tax, basically. Okay, now I have to explain something small about other income. In fact, today we are just familiar ourselves with the format and some few structures of it. Other income refer to the other types of earning or revenue that we've earned, but not coming from our ordinary course of business. So the other revenues aside our main revenue, aside the main earnings, you earn small aside the main ones. So those ones are what? The other income. Examples of other income, we will take a section where we write all the breakdowns. All the breakdowns. So we are just scanning through how to present them. Can you pick this approach and then you are fine. Even though there are some few alternative presentation. So for those one, when I solve a question, I'll just be taking them one after the other and then expose you to it and then you are fine. So this is the other income. So if you add it to operating profit, let's just call it, this profit is before interest and tax. Now, let's assume that you don't know Kaswa. Yes, we don't know Kaswa, including me myself. So you're going to Kaswa. I don't know them, but you're going there. And then you are before Odoko and Malam Junction. So where are you now? If you are before, you are going to Kaswa. And you are before Malam Junction and Odoko. So where are you? I'm assuming you don't know Kaswa. So don't tell me that Kanashi. If you tell me Kanashi, that means you know Kaswa very well. Someone that is just alien to the road, or the person that don't know that route, I've known you before. So if I'm in front of Odoko and Malam Junction, then it means that your next junction will be what? If you are going to Kaswa, you don't know there, but you are before Odoko and Malam Junction. What will be your next destination? You are before Odoko and Malam Junction. You are before. So that means your next junction is what? Odoko. Perfect. So our next junction is Odoko. So if you are before interest and tax, what's your next junction? Interest. Before you finally reach what? Malam Junction, and that's the tax. Good. Tell the examiner this. Can you let the examiner know this? Okay. So if you are before interest and tax, your next junction should be the interest. And we have a nice name for it. We call it finance cost or interest expense. Finance cost. Or just call it interest expense. So we can just call it interest expense. The interest expense. And that is the finance cost. Finance cost is the interest expense. Okay. So much. We'll look at it, how to obtain that figure, and then we move on with the game. Now, should I add or subtract finance cost? Should I add to the profit? If I have to subtract to all costs, all expenses need to be subtracted before. All costs or all expenses need to be subtracted. Great. So let's see. Now, right after subtracting your interest from the profit before interest and tax, what will be the next answer? Now let's come back to our story. You are going to Kaswa. You are before Odoko and Malam. But now you've passed Odoko. So where are you now? Any answer? So right after Odoko was the next junction. Where are you now? That means you are before Malam Junction. That is all. If you tell me that you are Sakaman, that means you know the road. You know the route. Yes, if you tell me that you are, let's say, cheaper, that means you know the road. So it means that we are before tax. So after, let's say, interest, you get what? Profit before tax. Let me write that one here. Profit before tax. Before. Profit before tax. That is it. That is a profit before tax. I'll claim this section and then continue from there. Okay, now let's do something in here. So, right after profit before tax, what do you think will be the next action? I'm continuing here. The next action is called income tax expense. So much is subtracted. What do you think will be the answer? If now you've passed Odokov, you've passed Malam Junction, so where are you now? That means you are at after Malam Junction, so that's profit after tax. We call it profit after tax. I normally call it antipath. So that's the name that I most often call it. So antipath. So much. You are not done. This is a profit section. They left the other comprehensive income. Now you move again. OCI. We now move to OCI, other comprehensive income. OCI, other comprehensive income. So let's see. The next line, please and please again. The profit after tax is also called profit for the year. Another name, profit for the year. Another name, we also call it net profit. So take note that when I mention net profit, profit for the year, antipath, it means the same thing. So profit for the year, and then many ones, we mean the same thing. So let's take notes of that. Okay. So let's see. So let's see the game. Right from this angle, we are moving on. We have what you call other comprehensive income. We call it OCI. OCI, other comprehensive income. So other comprehensive income. Can you add it to it for me? One known as OCI. Okay, over here we only record revaluations. So if you have any other comprehensive income, add it to it. So you can have what we call revaluation gain or probably loss. You add it in. So after adding the other comprehensive income to it, you now get what you call total comprehensive income for the year. I mentioned I've made that figure very big. Yes, because it's very huge. Especially after a lot of fish. Now, the issue is this. We should know the difference between other comprehensive income and the other income that we saw. What's the difference? Because if I delete the comprehensive here, then they'll be the same. Other income and other income. But there are difference between these two. Let's look at the difference. The difference lies in the comprehensive, the word comprehensive. The issue is this. When you say other income, simple and other revenue that you've earned aside your main business. So if you're in employment, your other earnings aside your employment income becomes other income. That is it. Could be gift, could be side business that I've been doing, selling at the office. Yes. That is it. So examples of other income in business terms, we look at them though in detail. Let's write them down. Examples are: number one, interest or dividend received. Dividend what? Received. So assuming that you have invested elsewhere and they're giving you extra earning or they're paying the interest, it becomes other income to you. Or you own a share in other business and now they pay a dividend, it becomes other income. Why? You did not register your business to be investing in people's company, buying shares. No. It was an opportunity that you took advantage of and it has given you some sort of return. And that one is other income. Number two, rental income. Rental income. Like in front of your office premises, there's some free space there that at least 5 to 10 vehicles can park there at a time. So you turn that one to a mini car park for rental. People come in busy days, traffic hours, people park their vehicles there and you charge them. And that one becomes what? Other income, because you did not register your business to be renting the space in front of your office to people. That one adds to other income. So any income now which is not coming directly from what you are in to earn. Number three, profit on sale of non-current assets. Anytime you sell any of your non-current assets, the profit that you had or the profit that you get on it, you will classify it as what? You classify it as other income. Okay. Then I'll talk about finally we can talk about grants. Grants, government grants. You can also talk about the fair value gain on investment property. Yes, other one to it. Fair value gain on investment property. So these are other income. This one, they are realized. They are not like hearsay. They are like attentive. They are like, oh, imagination. I'm imagining that somebody will come and park in front of our office and I'll take the person 100,000 cedis every month or every year. So therefore, I've earned 100,000 cedis. Who lied to you? It's a big lie. Okay, now you've perfectly gotten the other income. Let's move on to the other comprehensive income. Let me waste it. Now, when you talk about other comprehensive income, OCI, here I call it a tentative gain, notional gain, ideal gain, like imagination. This gain, nobody will probably give you money out of this gain. So that's why we call it a comprehensive. It's very complicated. The gain is not realized gain. For instance, you are there, and then your asset, one of your buildings, the book value of the building, let's assume is somewhere $400 million. But the market value or the fair value happen to be 450,000. It means that now in your books, the asset value is $400 million. But on the market, you can sell this asset for 450. Okay, so if you should sell the asset today, in fact, you are going to make a gain of $50 million. So this is called revaluation or gain. How we get it? Now let's look at something new. So this asset that you've not even made any plan to sell it, because the market value has shoot up or probably has increased. Now we are telling ourselves that we've made a gain. Who like you? That gain. Now this 50, will somebody give you a check? Is somebody owing you a check of $50 million? No. You are not going to receive any money for this 50 million. No. Because you have an asset like this in your book. You said this asset, the book value is what? 400 million. And so yes, you agreed. Let's put somewhere here. On the market, this asset, I can get it for 450. Okay, but I have 400 there. That means if I should go and sell this asset, I will probably have a gain of what? 50 million. But here you are, you've never made a plan to sell the asset. So therefore, this gain is not a realized gain. So it's called tentative, notional, ideal, something that's not realized. So that's why we call it other comprehensive income. So take note of the difference between other comprehensive income and what? Other income. For the purpose of your examination, other comprehensive income include a lot of items, but the main one is what? Revaluation gain or loss. So we should take note. Good. So that is the difference between this. Now we are done. Let's go to the financial position. And then change in equity. Yeah. We'll look at change in equity first and go to financial position. Yeah, I want us to look at the format one after the other. So you know the position of all the items. Okay. So that's that. Let's move on with the game. So that is that. But if you have any question, can you ask before we move on with the game? So that is the end for the format for the comprehensive income. I'll quickly scan through the remaining ones also for you. So let's do it together, even though we observe social distance by studying together. Okay, let's see. Now we are looking for statement of changes in equity. That one to store the name of the company, don't dot it. Name of the company. The three protocols. Second, the heading. We call it statement of changes in equity for the year ended Thank you. Please, here we should know the equity items. So I'll list them down for you. We should know the equity items. So write this one down as the equity item. Equity items are number one, stated capital. Your stated capital. Stated capital, which can be comprised of what? Your ordinary share capital, and preference shares. These are the stated capital. So equity items, in fact, there are many. I'm missing one after the other. The first one is stated capital, which is made up of what? OD shares and then the preference shares. That is all. Let's move on with the next item. Item number 2 is a share deal account. Share deal account. This is not in the case of Ghana and some African countries. No, this is not a case of Ghana. So if it is a Ghanaian question or some of the African country examination bodies, we will not have what you call share deal. No, we will not have share deal. We will have our stated capital. I think I'll explain that when we pick a 4 question, why we don't have that. So just take notes. So number 3, we will have what you call the income surplus. Income surplus. It's an example of equity item. Income surplus is also called retained earnings. Retained earnings. So the earnings that we have compiled, retained so far since we started operations, all the profits we have kept so far. So retained earnings of retained earnings. Okay. Now, I also call it accumulated profit. Oh, yes, accumulated profit. Profit that we fought, accumulated until we started operation. Number 4, we have what we call capital surplus. Capital surplus. You look at it. Capital surplus. We also call it revaluation reserves. You can also call it what? Revaluation reserves. Revaluation reserve. Revaluation reserve. In fact, what I'm doing here, myself, I can't even see. Revaluation reserves. Myself now, I cannot see. Revaluation reserve. Okay. Or revaluation surplus. Item number 5. Item number 5. We also have what you call other reserve or general reserve. general reserves or other reserves. So take note. Now we are going to rearrange this item in a nice way. These are the equity items that we are going to arrange over here. So let's see how best we can arrange them in. So we are going to arrange. Now when you talk about statement of changes in equity, it means that from day 1 up to the end of the financial year, January to December, or April to March, transaction and events public for CAD within organization. How will it affect your equity? How will it affect the owner's capital? That is all. So changes in equity simple means the transactions and events which took place during the year, how will it affect the capital? So statement of changes in equity, the equity capital, how will it change? How would equity correspond to the transactions? So here you start with your stated capital. Stated what? Capital, as the heading number 1. All the equity items, please and please again, the equity item that you see in the question, that is what you must bring, not what we have listed here. What we have listed here is a general view that at least every examiner will pick maximum of 4 or minimum of, let's say, 2. Minimum of 2, maximum of 4. An examiner will bring it. So you have a nice table for it. Okay. So the capital. Then you move on to income surplus or retained earnings. Income what? Surplus. The next line, then you move on to capital surplus or revaluation. So capital surplus. And finally, you have your total. So if there are many, you continue, you write all of them. I'm limiting myself to only what? 3. Yes. The least one examiner will give you is 2. Maximum of what? 4. So I am limiting myself to 3. Everything perfect. What is in is what I want to write, not probably what we've listed here. No. Don't forget your currency, your reporting currency. You're reporting in Ghanaian cedis. It's in thousands, so write it like this. These are the 3 protocols. Okay, so like this. Then you start with your open balance. Open balance. Well, all of this, they'll give it to you in a trial balance. Open balance. So much, so much, so much. Their total, write it here. Now we get it. Then immediately, if there's any error coming from the previous year, any mistake committed previously, so we call it prior period what? Errors, kindly correct it. Maybe normally to affect the income surplus, the rest dash income surplus. Then it starts. If they have issue shares, the items are number them, okay? Item number 1, previous year's errors. So let's come here like this. Item number 1, previous year's error. Item number 2, issue of shares. Issue of what? Of shares. Where do you think will it go? It will go under stated capital, or the ordinary share, or the preference share. So the type of share is issued. Bring it here, dash. The next item is what? IT, anti-VAT, profit after tax. So you pick it from the comprehensive income. So profit and tax will come under what? Income surplus. You add dash and then you add. Just that if that figure was found in your comprehensive income, it will follow you here to also be marked wrong here and it will also change things. Item number 4. You have to make what you call dividend. Dividend. All these items, we'll do workings on them. Dividend. Dividend will affect income surplus. So subtract dividend. Dash and then another one subtract. Whatever hits here must hit the total section. Finally, item number 5. Tell the examiner whether there has been a revaluation. Revaluation gain or loss. That one will affect what? The income, sorry, the capital surplus. Finally, you record the same answer here. We are done. When you are done like that, tell the examiner that you want to close the balance. The examiner will allow you to close it nicely. So underline all of them. Double underline all of them. And then write closing balance. This is open balance, right? Write your closing balance. Closing balance. You sum all up, you put it here. You sum all up, you put it there. You sum all up, you put it there. You sum all up, you put it there. You're done. So kindly do that for me. Now let's finally look at the format for the financial position. Then we now start the actual game. So far, we are still, it's not done anything. It's not done anything. This is to help the non-accounting students to pick and grab the formats and come and compute successfully with accounting students. Very good. And if the case is not taken, the non-accounting student will do well an accounting student. That's the good news that we have. Let's go to the financial position, the balance sheet. The balance sheet is the sheet that contains balances. Any leftover, any balance must be presented there. That one too, don't forget the 3 protocols. The name of the company. The name of the company. Then you start. I wish I can do this one. Market the board. But that one is very lazy. Okay. So the name of the company. The examiner will give you the company name in the person. Pito, let me check. Okay. Pasa Limited. It seems like the board is too far. It's not that clear. Okay. Then you start. As usual, statement of financial position. As at, then the date continue. Statement of financial position as at the date continue. Here we need one currency. Your Ghana cedis in thousands, or you can also provide 2 currencies to mind you. You start with your non-current assets. So non-current assets. And thank God we've done that under the conceptual framework. So please and please again, if you have not fully satisfied yourself with the conceptual framework that we did the last time, kindly revisit it and look at it. So your non-current assets you can. So non-current asset. Underline it. First of all, you write PPE here. Property, plant, and equipment. Please and please again, not shortcut. Write it in full. Property, plant, and equipment. Property, plant, and what? Equipment. No shortcut in exams. I'm begging you. No shortcut. Don't do shortcut in exams. Okay, so that's so PP so much. That's non-current asset. Example for non-current asset number 1, PP. Number 2. Item number 2. Investment property. Investment property. Item number 3. Item number 3. Long-term investment. Item number 4. Intangible assets. Perfect. So these are the examples of non-current assets specifically. You sum them up to get a total. Please and please again, if only if they are in a question. If they are in a question, it's not my fault to write them here. Yes. Because exams, we are not telling you about the format too. That tell us everything in it. No, if it's in a question, because you are applying a financial statement. Then you go to current assets. Current assets or current assets. Current assets. Down to underline it. Current asset, you start from your inventory. Inventory, so much. Your trade or receivables. Your receivables, so much. And basically your cash and cash equivalents. Cash and bank balances. So much. You sum them up, you get your total non-current assets. Total current assets. So they are total. Let me assume that is the top. So total current assets, like this. Then you have what you call total assets. A total asset is nothing by the total non-current asset plus the total current asset. That gives us what? The total assets. Right from total asset, then you hit the equity and liabilities. Equity and liabilities. So come here, equity. Another equity and liabilities. You start with the equity. Tell us equity. Don't forget that the balance sheet, there are 2 methods. Let me write the method here for you. Method in presenting the balance sheet. Method 1, we have what you call total asset method. Then method 2, we have the net asset method. For now, we are using the total asset. I don't intend to confuse you. What happened is this. When we are doing the conceptual framework, we mentioned something like accounting equation, where asset is equal to what? Equity plus what? Liability. So all assets, one line or one side. Add all the assets, both current and non-current. When I can relax for a while and come back again, then pick equity, add it to all the liabilities, and this answer must be the same. And then this answer must be the same. So basically, that is it. Okay, so take notes. And that's the approach that we are using. We started with the non-current assets here. We finished them, and then we went to the current assets. Okay. Let's finish the game. Okay, so let's go to equity. Now, all the equity items that we listed them. So you get your equity items, the input from where? From that of the changes in equity, the items. So first, you start with the stated capital. Stated capital, which is so much. You go to your income surplus. Income surplus, so much. Income surplus, if you don't want to do the change in equity, don't worry. Tell the examiner it's equal to the opening balance plus antiparts plus dividend. That is all. That's the simplest version of the income surplus. So opening balance plus antiparts, that's a profit after tax coming from your comprehensive income, plus dividend. Mr. D, dividend, right? Good. Mr. Dave. Okay, so that is that. Let's move on with the game. We are getting to the tail end of the format. If you familiar yourself with these formats, final account preparation will not be too difficult. We have to understand the position where everybody stands. Before they are done, we'll go and fight for how we can get the values. Even after getting the values, if you don't position them correctly, you swap them, which we will not talk. We also swap them out for you nicely. That's all. Better one, there is a value, right? You swap the position, which you swap the marks. Yeah, done. That is what probably you will do. The capital surplus, I'll not write plenty here. Capital surplus. This total equity. Then you come to non-current liability. What are the non-current liabilities? What is the non-current liabilities? Non-current liabilities. That's it. So when we did the liabilities, element of the financial statement under the liability, under the conceptual framework, we mentioned non-current liabilities. What are they? Non-current liabilities. Example number one. That example now, loan note or long-term loan. Loan or loan note or debenture. So much. Another example of non-current liability is what? Deferred tax. Deferred or tax. So much. That is all. Go to current liability. You add or you leave it and go to current liability. Please, it's not go there. I don't want to squeeze and come in here and continue the game. I'm just cleaning this side like this and continue the game. So you go to current liabilities right from here. Current liabilities. Current liabilities made up of what? Number one, your payable. Payables. Which is the same as what? Creditors, right? Okay. Trade or account. accounts payable, or trade payables. Any of them will do. The next one is probably if you have bank overdraft, then you have what you call current year tax. Current year tax. That is all. Put all the liabilities together. Put all the liabilities together. All the liabilities. Starting from the non-current liability plus the current liabilities. So you get what you call total liabilities. Total liabilities, right? Total liabilities. Then you relax for a while. Then you come back for the final show. Finally, add your liability because the accounting equation is like this. Asset must be equal to what? Your equity plus all your liabilities. Now we know equity. Where is equity? Equity is here. We know all the liability is also here. So let's put them together to balance the equation. So therefore, we have something like this. So we have total equity and what? Liability. Total equity and liabilities. The number line is. This answer must be the same as the total assets. What happened now? Then you shout in the exam soon. Yes, yes, got it. Then you move on. Good. Even if in exams you are not into balance an exam condition, definitely. And then with the help of your calculators, you might not be able to balance it because sometimes you are pointing to equal 3 on the calculator. So balancing is not what we are interested in. We are interested in you scoring a lot of ticks, a lot of entries, making most of the entries correct. That is the benchmark, not the final answer. No, not the final answer. Yeah, because what 99% can do, 52 can also do what? Even better. Yes, even better. That's that. Now we are done. I will probably pick a question. Now, I'll pick a question. In that particular question that I'll pick now, we will solve it without any footnotes to just appreciate the format. So pick a particular question, we solve it without what? Any footnote. That's any footnote. When we are done, then we now introduce ourselves to the footnotes. So kindly take notes of that. Okay. Good. So let's see it again. Okay, we are going to pick our first illustration. Our first illustration without any footnotes. And right after that particular one, then we now tackle the footnotes one after the other. One after the other. Again, all the formats have been provided, but I think the detailed one is what we did together. The detailed one is what we did together. So that is that. So you have all of them in here. Then some planetary notes. Let's quickly go through the first question. First question, Success Limited. Let's look at, I'll solve I will look at it's well. Yeah. Let's look at it's well. Okay, it's well. It's well limited. Okay, so we are looking for Impuntio Limited. Impuntio Limited. And that is ACIB October 2019. Okay, so let's start again. I'll be very fast. We are not going to touch any figure in a footnote. We are going to treat only the trial balance. So I'm just going to post. We are done. Have you seen? So I'll be very fast and kindly be with me when we are going through. Kindly join the choir when we are singing the hymns, because right after we say Amen, we are done. No rehearsals again. Okay. So that is it. So we are only limited to that of the footnote in here. Sorry, the items in the trial balance. So in a trial balance, they'll prepare a trial balance for you. A trial balance must balance. If there's no balance, your financial statement will not also balance. That is it. If your trial balance fails to balance, the financial statement too will not also balance. So that's one factor to know. Let's start with the game. Impuntio Limited. Impuntio Limited. That is the name of the company. Let's go and see the requirements. You are required to prepare the following financial statement in compliance with the Companies Act. That is another that you are aware of. That the financial statement must comply with the country's Companies Act. So if you are UK, it must comply with the Companies Act 2006. Take note of that. If you are in Ghana, it must comply with the Companies Act 2019, Act 990. And the International Financial Reporting Standard, the IFRS is here. That is it. A statement of comprehensive income for the year ended 3rd December 2018. A statement of change in equity, and then a statement of financial position as at that day. Okay. So I want to quickly prepare these three statements without touching anything in a footnote, and then we pick it from there. Then we now be adding the footnote one after the other. How to go by the footnote? Have you seen? So even if you know where you have to post the individual items from the balance sheet, at least it will serve as good news. Let's see. First, so let's go to the board. The name of the company is called Impuntio Limited. Impuntio Limited. So look at how we will go by that. Impuntio Limited. So, and there I'll be very fast. We are not touching anything in a footnote for now. Just for now. At my intro stage, footnotes, we don't touch it for now. So right after that, we now pick a full section where we now consider all the footnotes. So we do the footnotes one after the other, and then we move on with the game. Let's see something in here. So I'll start the game like this. So now start the game. Tell the examiner that this question is about Impuntio Limited. Impuntio Limited. I'm coming here. Okay, so tell the examiner that you're looking at Impuntio Limited. Okay. Impuntio Limited. Tell the examiner that we are doing statement of comprehensive income. So statement of comprehensive income. For the year ended They said 31st December 2018. 31st December 2018. Can you move along with the examiner? How he quoted the date? Quote the same thing. I'm just now he quoted the date here. Compressed income for the year December 31st, 2018. Quote the same thing. Don't change anything. Just copy. Copy everything I see there. Copy it for him. That's all. And then let's check whether the reporting currencies are in thousands of cedis. Let's see whether they are in thousands of cedis. Ashish are in thousands of what? Ghanaian cedis. Thousands of Ghanaian cedis. So that examiner, we're also reporting in thousands of what? Ghanaian cedis. Now, where do we start from? As usual, sales. So sales revenue, sales. So with sales, let's go and pick the sales. First, we must come through where all the items to go. So let's come through all right, one after the other. So now be with me. Stated capital, you go to financial position and changes in equity. Income surplus, the same thing. Furniture and fittings, PPE. Cash and bank balances, current assets, cost of sales. If you go to comprehensive income, stock. That is the closing inventory. Closing stock. If you go to where? Current assets. 80% debenture, non-current assets. Sorry, non-current liability. Long-term investments, non-current assets. Provision for depreciation. PPE schedule. Motor vehicle, furniture, all of them. Sales. The sales is somewhere here. 315,000. Let me go put it in. I forgot them. Sales. So 315,000. That's the sales revenue. The next item on the list. Let's move on. Director's fee. Okay. Expenses. Auditor's fee. Audit expenses. Proceeds from sale of fittings. Other income. Provision for bad debt. You look at it. Trade debtors and creditors. Capital surplus, OUR, stated capital and balance sheet. Motor vehicle, PPE schedule, equipment, PPE schedule. Admin expenses, interim dividend, investment income, debenture interest, tax paid, provision for deferred tax. Okay. So let's see. Okay, so right from here, we move on to what? Cost of sales. So that examiner, less cost of sales. So cost of sales, we are limiting ourselves to only the items in the trial balance. So take note, only the items in the trial balance. So cost of sales in here, cost of sales, why cost. So it's somewhere you 45,000 here. Cost of sales 45,000. Good. Let's go and put it down. Kindly help with the calculation. So what's the gross profit? Gross profit. Friends online. Gross profit.
$270,000.
So cost of sales, sorry, the gross profit happened to be 270,000. Perfect. 270,000. Right from there, we start with matricule part 1 and 2, meaning that we have to put everything together and call it operating expenses. You can also call it what? Admin and distribution cost. You can also call it admin and what? Distribution. That means you have combined admin and distribution costs together. Because exam time might not be in the right mood to do the separation. Time is also going. So this one will be admin or distribution. Time is not there. Put all of them together and move on. Something that you thought is an admin. Meanwhile, the examiner classifies as what? Distribution. So let's take note of that. Let's go. Here you do your workings. So first, come and do your workings here. So workings number 1. Third examiner, you're calculating what? operating expenses or admin and distribution. Now, I have a sheet of paper here. Let me check. I have some here. I have a sheet of paper here. Good. Hold the question paper like this. Hold the question paper like this. And with one hand, hold a pen. Writing. First item on the list. If you are like type that, you have to put the thing back before you can see it well. You throw it back a part of the examination. And then check from the travel from the very first item to the very last item. One after the other. Don't jump. Okay. So let's go and do that. We are going to scan through from very first item to very last item. Don't jump. Because if they give some of us a chance, it will change things. Because for instance, if I'm set a question like this, I only scatter them. I don't put all the operating expenses at one side. I'll scatter them. I do that for those who like just use their eyes to look through and pick them. If you hide it behind any other item, they might not see it. But if you group them like this one, oh, they'll see it easily. So it's come through. Total capital, no. Income source, no. Furniture, no. Cash, no. Cost of sales, no. Stock, no. Debenture, no. Long-term investment, no. Provision for depreciation, no. Furniture, no. Motor, no. Sales, no. Director's fee, effort, director's fee, so let's go. Director's fee. Director's fee is what? 9,000. So director's fee. So director's fee. Yeah, to don't forget your currency. Director's fee is 9,000. The next item on the list is what? Auditor's expenses. Yep. 6,000 is part. It should be auditor's fee. Sorry. Auditor's fee, 6,000. Next item, one after the other, line by line. Don't jump any line. Don't do like, oh, look and see or look and pick. Because if you meet a type and then we scatter the items in, while your eyes are not seeing it, it's very difficult. So line by line, so that by the time you scan through one after the other, you won't miss any item out. Not that when you finish the exam, you probably in your way home and realize that there's a certificate that you didn't touch it. So, so this figure was inside the trial balance. I never, I didn't see it. Look at where they hide it. How can you see something like this in the exam food where all your eyes, in fact, they're on, but the mood. So please, line by line, I'm begging you. Audit expenses part is 500. So let's go. Audit expenses 500. Audit expenses 500. Next item. The next item will be proceed, no. Provision, no. Trade debtors, no. Capital surplus, no. Motor, no. Equipment, no. Look at where they got admin. Admin, yep, 33,000. So one after the other. Admin expenses 33,000. Obviously, line by line to avoid oversight. I did not see this. It's very painful. Very, very, very painful. I did not see this. It's very, very painful. So take note of that. The next item is what? Interim dividend, no? Investment income, no? Dividend, debenture interest, nope. Tax paid, nope. Pushing for deferred tax, nope. So that's all. So if this, I want you are sure, 100% sure. So take notes. of that. So now we are done with the operating expenses. So I'll sum them up in here. That's 48,500. Perfect one. 48,500. So I'll come here. I'll tell the examiner that. So I'll write it here like this. Operating expenses. Mr. Examiner, please go to workings number 1. Kindly refer them. Write it W1 and then code the figure 48,500. So that when marking, when you see something like that, you have to pause. Go and mark the workings before you come here. Okay. Then you subtract. Okay. Then you subtract 9. So 221,500. So 221,500, and we call it operating profit. Next item is our other income. Other income. And we mentioned that other income includes the following. Other income includes the following. We list all the composition of what? Other income, which is made up of 1, investment income, interest received, dividend received. Investment income is an example of what? Other income. So let's take note of that. Okay. So that is that. So let's go and calculate other income. Let's go to this trial balance. If you have other income in, so we trouble. Hey. Sorry, trouble. Income. Let me something in here. Okay, good. Okay, so I think we can continue the game. Let's know if you have other income in. Income surplus, no. Furniture activities, no. Other income. One after the other than that. Proceeds from sale of PP. For now, we will do that what? Other income for now. The proceeds, we will do that what? Other income for now until further notice. I'll do some adjustment on it in further workings. So this is number 1, other income. So let's go. Is there any other item again? Let's search again. Wait, there's investment income here. It's also other income. All the other income, they must be at the credit side. They have a credit balance. All the other income have a credit balance. So therefore, the other income, investment income of 24, proceeds from of 3,000. So workings number 2, that examiner, other what? Income. Number 2, first item on the list is what? Proceeds from sale. We had 3,000. Second, we have investment income. We have 24,000. Putting all these together, we have what we call 27,000 series. Now this 27,000 series, kind examiner, Mr. Examiner, can you go to workings number 2? 27,000 will be there waiting for you nicely as the other income. You sum it up, get a nice answer, and you call it. So you get 248,500 to be what you call profit before interest and tax. I'll continue from other end there. Okay, I think I can do one more. One more, right? Yes, one more. One more. Okay, so interest expense or the finance cost. Either the finance cost or the interest expense. Finance cost. Now this finance cost, there's something that I normally call it implicit trick. It's inheritance. It's something that comes with it. So inherent risks, it comes with inherent risks. The risk that's like it's original, you can't do with it. So take note. Now, first, I want to explain this thing to you for you to get it well for me, so that you do it for the examiner. Now, when we talk about the finance cost or interest, it includes all the following. So, composition of the finance cost. Number one, finance costs include all interest incurred or all costs incurred in securing funds. That is the finance cost. It excludes the principal. Finance costs does not include principal. No, principal is not part. The principal amount is not part. It's the interest charges that you normally pay. Good. It includes one, interest on loan. Number two, interest on what? Bank overdraft. Number three, bank interest. Bank interest in the form of charges. For bank interest that they charge, like processing fee. Number four, processing fee or transaction cost, TC. If you are going for probably a facility or a loan, you'll have something called processing charges, processing fee or transaction cost, or administrative charges in connection with what? The loan. Before they give you the loan that year, they ask you to be paying 1,000 cedis for processing fee. So you pay because you need that 200,000 badly. So you pay that 1,000 cedis and they give you the 200,000. That 1,000 cedis should be part of what? Finance cost. It is not an administrative cost. You didn't pay that money to an employee or to run a business. It's when you're going for what? Finance. That's why you pay that money. It's part of what? Finance cost. Good. That's all. Just that how we get the interest on bank loan is very some way. If I want to worst the case, you can even add what you call unwinding of the discount. So it's also a finance cost. Just that we don't worry much about this. Okay. Now let me do this for you to get it. The finance cost calculation. Sometimes we will tell you the amount taken or the amount secured. So let's say the amount secured is 20% loan. The person paid 50,000. Tell me the interest that the person will pay every year. So every year the person must pay interest at the rate of what? 20% on the 50,000. What is it? 20% loan note. That means the interest per year is what? 20%. So the interest that the person must pay every year should be 20% on this. That will give us 20% on 50,000 should be 10,000, right? So the whole year the person have to pay 10,000 cedis. Perfect. That is the interpretation. So in exams, when they give you the rate of the interest and then the principal amount, Just multiply, be sure, and get the total interest that the guy is supposed to pay. And keep that one in the comprehensive income, whether the guy has paid or not. So the 10,000, 20% on this, you put the 10,000 in the comprehensive income straightforward without asking any question. Whether the guy has paid this money or not, can you put it in? Because that's the interest was incurred. All the expenses incurred according to accrual concept, in which we did it under what conceptual framework, it must be recorded, not when you paid for it. Yeah. Okay. Now, if you go to this trial balance and they've recorded interest on the trial balance, any interest you see on the trial balance, it represents interest paid, whether the examiner tell you or not. Take note. So if you see interest on a trial balance, it represents the proportion of the total interest they've paid during the year. So let us do this scenario. I place 7,000 on a trial balance at the debit side as interest. It means that out of the 10,000, I have only paid 7,000. So do I owe? Yes, I owe. I owe what? 3,000. And that 3,000, I have to send it to a current liability and key in the full interest in here. So tell the examiner that 3,000 will be sent to what? Current liability, and 10,000 will go to your comprehensive income. That is all. So take note for this. Normally, we set questions like that. What if in a trial balance, you see something like this? You see 10,000 in the trial balance. What does it imply? And that means the guy has paid all the interest, so he's not owing. So nothing goes to the financial position or the balance sheet as what? As current liability. No, nothing goes in there. Then finally, what if you don't see the interest in it at all? There's no interest on the trial balance. That one's a very terrible situation. If there's no interest on the trial balance, it means that they've not even paid 1 peso or 1 cent of the money. All the 10,000 they are owing. So that means the entire 10,000 comes here, and the entire 10,000 goes to where? The financial position as well, current liabilities. So let's take note. Finally, before I put the marker down, what if it's like this? This 20% is not in the question, but there's interest in the trial balance of, let's say, 6,000. Someone should tell me how we should treat this. There's a loan note. The root loan note of 50,000. The same. How do you treat this? Friends online. Okay, however, the 50,000 is the principal. The finance cost does not include the principal. Finance cost means much more money that the guy must pay before you pay this 50,000 to you. That's much more money that the person needs to be paid before you finally pay the principal. It's what we mean by finance cost. Is the interest. So here you have to record interest of what? 6,000, not 10,000. Why? There is no percentage in here that we can use it to confirm the interest. The interest that is inform us, that's the best interest, that's the correct interest. You record just the 6,000 coming from the trial balance. Take note of this. Good. So that's that. Now let's solve this question. So with the help of this understanding, any finance cost should not be a big deal. Should not be a big deal. Yeah. So let's go and solve this particular question. This is good for me. Great. So here start work. 18% debenture. The value is what? 100,000. This is the principal. 100,000 is the principal loan, or the principal value of the loan. Is the actual amount credited or picked from the bank. Fine. Then I go down here. Oh, debenture interest, they put 14,000 here. So this 14,000 represents the proportion of the total interest which they pay during the year. So tell me how to treat this within just 2 minutes. Good. So in short, in the P&L, find 18% of 100,000. That's 18,000 moved to the P&L straightforward. So I'll do it irrespective of any amount stated in a question. So here, open a bracket here. That examiner that is nothing by 18% times 100,000. And that'll give us 18,000 cedis. Subtract it. Please and please again, I'm begging you, don't just pick your calculator like this and hold it. Punch the answer and then throw in the final answer here without showing workings, please. It is an offense to do that. Yes. Tell us how you got this 18,000 because not in the question. Perfect. Perfect. Okay. Then after that, they go and check how much have they probably paid during the year. During the year, the interest that they paid is what? 14,000. So therefore, they are owing what? 4,000. So 4,000 go to the financial position as what? Current liability, and you are done. This one, we don't need any footnote to inform us. So even if we start with the footnote, we are done with this. That is all. Perfect. So I'll do that in the balance sheet, the financial position. Like it's only good financial position. So now let's move on. So what's the next answer? After taking this 18,000 from it, we get what we call profit before tax. Profit before tax. I like the game. I really like the game. So I'll continue from here quickly and then finish the game. Finish the game, finish quickly. So you get 230,500. 230,500. So that's profit before tax. So that examiner that is profit before tax. 230,500. What's the next answer? The next line will be what? Our income tax. Income what? Tax expense. For this one, I'll do it for you because we have to perform some, we have to go through some series. So don't need to worry, for you, I'll do it for you until I fully treat income tax, then you take over. So now just allow. Every time I tax, just allow. After I treat it, you'll be fine. Okay. Okay, that's fine. Income tax. Let's go to the trial balance to see whether they have income tax there. Anywhere there's tax, Tax paid 3,000. Okay, it's only one, right? I'll bring it. This one is tax. It's different from what? Provision for deferred tax. Provision for deferred tax, let's treat as what? Non-current liability. So tax is what? 3,000. Income tax, 3,000 for now. Just for now. I'll do everything for you. So therefore, you get 227,500 as what? Anti-tax. Profit after tax. Anti-what? Tax. Profit after tax. Or Madam Pat. Madam Pat. Then examiner. Other comprehensive income, OCI. Please, no shortcut. No shortcut. Yeah, because we are not touching anything in a footnote, that examiner that is what? Dash. Then add everything, you get what we call total comprehensive income. It's still 227500. Perfect. Okay, 22750. I will not do changes in equity. You will try changes in equity for me. I'll go straight to the financial position, and then we are done. Okay, so let's quickly look at for the financial position. I'll start from here and then end at the other side of the board. So I believe strongly that you just some few points down. You have joined some few points down. If not, you can reverse the video and then jot some few points down. You can reverse the video and join, put some few points down. Okay, now let's continue the game. The game will be very good and very nice. We are doing financial position. Changes in equity is your own. Can you try? You 24 hours. Send your answer. Good. Statement of financial position, popularly known as what? Balance sheet. A sheet that we use to record all balances as at a particular period. All balances. Okay, so as at 31st December 2018 online. So my reporting currency is what? Ghanaian cedis. It's in thousand. I'll start non-current assets, NCA. No shortcut in exams. Take note. I'll start by PPE. I have to go into workings. Now the PPE, for now, let's maintain this particular workings. For this figure, I don't want to claim it too because I use it. But I have to claim it. When I need it, when I call for you, give it to me. Anti-part, that's the profit after tax. Okay. What happened is this. We have to continue the workings. Please, what was the last workings that we did? The last working was workings number 2. This workings number 3. Workings number 3. We call it PPE schedule. PPE schedule or PPE table. PPE schedule. Now in the PPE schedule, we have so many, like, have the comprehensive format there. That comprehensive format is a bit critical. So we have an alternative that we can use. Let's go by the alternative. That is a cost, accumulated depreciation, and what we call net book value. Accumulated depreciation. In fact, this thing, if I don't do it well, you can't see it too. But that side will not come in well. Cost, accumulated depreciation, and what? Current amount. CA. Current amount. You go to the question and list all the assets. Yes, let's go and list all the assets. Let's go. Let's go and list all the assets, and then we take it from there. All the assets. So let's start from first to last. Furniture and fittings. 120,000. That's the first asset. That's the cost. The cost is 120,000. So put it at cost. Put cost to cost. So the cost of furniture and fittings is what? 120,000. Good. So F and F. No shortcut to. Don't forget to currency. Currency. Okay, so the next item will be if I go down, if I go down again, I can see some provision for depreciation. The word provision for depreciation is the same as what? Accumulated depreciation. Look at all these ones. Accumulated depreciation we subtract. And this accumulated depreciation, I will do something like this. The columns that they've given to us, good. It means that the items that fall under it are what? They are the provisions. So provision for depreciation for furniture and fitting is 80,000, right? So I'm going to put it down. For furniture and fitting is 80,000. I'll put this in brackets. I'm subtracting. So can we put this in brackets? Because we are subtracting. Okay. Okay, so let's move on quickly. The next item is motor vehicle. That one is 50,000. But what's the cost of? Cost the motor vehicle, the cost came down. Motor vehicle, the cost is here. The cost is at every side, 120,000. Agreed. So motor vehicle, the cost is motor vehicle, so 120,000. Accumulated depreciation is 50,000. Let's go and pick the equipment and then we are almost done. The rest will run. Okay, so the next one is equipment. When you see something like this, the cost is 45. They've already subtracted the provision for depreciation or the accumulated depreciation. After subtracting, they had 30,000. That's the implication. So what was the accumulated depreciation they've subtracted? That's 15,000, right? So the cost is 45. Accumulated depreciation is what? 15, and the current amount is 30. How do I get the 15? It's just the difference between the cost, which of 45, and the current amount of 30,000. So therefore, it will be something like this. Equipment cost is 45,000, and then accumulated depreciation is 15,000. Let's find the current amount. Current amount simple means cost minus accumulated depreciation. So this minus this, 40,000, right? This minus this. This minus this will give us 70,000. This minus this. That should give us 30,000. Let me write this small here. Let me go there. No, let me write it too small. 15,000. This is what? 45,000. And let's sum them together. 40,000 plus 70,000, 110,000. So this is 155,000, right? Mm. 40,000 plus 70,000 is 110,000 plus, okay, there's a great. 45 minus 50 will never give us 45. So it must be 30,000. It must be 30,000. There is 30,000. If I sum all up, it must give us 140,000. Agreed. 140,000. So take notes, 140,000. One of those missing. 140,000. Good. Tell the examiner, it must go to working number 3. You see the PP there. Good. So that is that. Search again, if we have the other type of non-current assets, what are the other type of non-current assets? Intangible, long-term asset, investment property, then long-term investment, all of them. So let's go and see. I think we saw some long-term investment in it. Good, long-term investment, 150,000, that is all. That is 150,000. That is all. So 150,000, that is on a long-term investment, 150,000. Put all of them together, I get 290,000 as a total non-current asset. Move on to the current assets. That is now we are doing current assets. Current assets. current assets start from the stock. The mentioned stock in the question. Let's be a bit fast and then move away from the game. Move away. Stock. Why are you? Yeah, why are you? 34. Stock is 34. Then we're going to put 34 in. Go to trade receivable or trade debtors. I already mentioned it. That's trade debtors. Debtors is a local name. Receivable is the international name. Good. Trade debtors. So the first one for trade debtors, second one is for what? Trade creditors. So trade debtors is for 6,000. Check if there's any provision for bad debt. There's provision for bad and doubtful debts. 200. Kindly less all provision from where the trade debtors to get the net of the receivable. So therefore, trade debtors is trade debtors. The 6,000 less the 200, and that'll give us 5,800. That's the first thing we have to do. The next item is cash and cash balances. Cash and cash equivalent. They have cash and cash equivalent. Cash. Why? Yes, cash and bank balance is 360. So cash and bank balance is 360. So cash and bank balance is 360. Find a current asset for me. Let's put them together and let's go for total asset. Assets, and then we are done. Just love it a few minutes and then we move out from here. Love the last working or the last item fast move on. Okay, so as you are performing the calculation for me, let's also be doing to do the last thing, or the last episode of today's season. Last episode. Okay, so 401,600, and we add these two together. Get 691, 600. We double underline it. Okay, then this is not correct. Can you confirm for me? Yeah. Kindly confirm for me. Good. Kindly confirm for me. So do that is answer should be 68. Should be 699. Okay, so this answer should be something like 399,800. But I do have it here. My data access will not go there, so let me go and do the data set at a different section. So total asset to be here. Total assets. So adding this to this, you get something like 6,898,000. 6,898,000. So let's put it down. 6,898,000. It should be 800. Okay. So double underline it. Then we are done. And let's go to the last thing. Equity. Let's quickly run away to equity. Equity goes to stated capital. Yeah, the share capital has been given to us already. So let's go and pick it up and then say bye-bye to the game. Share capital is the first item on the 300,000, right? The share capital is what? 300,000. Then examiner, you want to look at income surplus. Open a bracket, open balance plus anti-tax less dividend. So what is open balance? Let's go and pick the open balance. Income surplus, open balance 40,000. So let me put it down quickly. 40,000 plus the dividend. Where is the dividend? Dividend, why are you? Dividend. No, plus the profit after tax. We had profit after tax. I think we have something like 227,500. Agreed. Let me confirm that for me. It should be something like so 227,500. Good. Can you confirm for me? Less the dividend, and then we are done. Oh. Then we move. Okay, so the dividend is 3,002. Dividend paid is what? 2,000. Dividend here is 2,000. Dividend here is 2,000. So less 2,000, right? Okay, let's see. So what will be the final answer? That will be 265,500. 265,500. And capital surplus from this question. Capital surplus. So let's see capital surplus from the trial balance. The capital surplus will be capital surplus. Where are you? Just this capital surplus 12,800. So 12,800. Let's quickly put it together. Let's go to non-current liability. Please no shortcut. 18% debenture. We had 100,000. If you get a total, you let me have it. The total for this. Then we would defer tax. Defer tax is 400 from the question. Leave the tax issue for me. I'll handle it. Okay, so let me just add the current liability to it then. I can add current liability. So let's go to current or current liability. Current liability. Okay, so 578,300. 578,300. Okay. I think that's. Let's go to current liability. The current liabilities are number one. Trade payable. Trade payable. Trade payable happen to be 7,100 from the question. Trade payable 7,100, and then we are done. Thank God. Trade payable 7,100. Again, tax though. Is there any expenses that they are owing? Is there any expenses that they are owing? That's one of the expenses that you have to tell me. Because one of the expenses, the person that will tell me will be the accounting cracker for the night. Oh, okay. So what to do is this: interest owing. That is interest what? Owing. Open a bracket. It was 18,000 minus what? 14. We had what? 4,000. Okay. Let me continue from this section. Now we are done. Let's balance it off and then sign off game. Let's balance it off. So let's balance it off. And then move. So I'll balance it in here. So first of all, get me the total liability. I'm going to write it, there is no space here. Get a total liability for me. So sum all the liabilities together. Total liability. What's the answer? Then finally, you add equity to it to become total equity and liabilities. So total liabilities. Right. 1,500. Total liability becomes 111,500. Okay, I think that. Then add this 111,500 plus the total equity, and let's see, it must balance nicely for us. Must give us 689,800 to get the total equity and liability. Perfect, and that's the end of the game. When you have it that way, it has balanced there. So have you seen that without any footnote, you can easily balance it. But look at the stress that you pass through. Imagine you're going to add a footnote to it. Hi, people will jam. So holiday assignments and the weekend work. Now, if I try one, you try one. So let's go to our material. You are trying a particular question called finish hard. A particular question called finish hard. You are not allowed to touch any figure in the footnote. You are just concentrating on the trial balance alone. Our next meeting, we are picking the footnote. Make sure that your own balances. Other than that, there's a particular called finish hard. And then we are done. So you are trying that and you are done. Question 4, tutorial question 4, page 35. Plus, good, finish hard is here. Hey, finish hard to trouble, but you try. Just try finish hard for me. So finish hard, and we are done. And you go and try it well. It was question 2. It was question 2, page 8. It well. These are the trial one. You are not allowed to touch the footnote. Just treat the trial balance itself for me. If you're able to balance. Our next meeting, we are looking at the footnotes one after the other. Together with the IFRSs. We are one combined. So that's the game. So thank you very much for coming. Can you subscribe if I've not done that? Good. Let me do something in here. For instance, if you want to this is not funny. For instance, you move to like this. So as soon as you sign yourself the main job, for financial reporting will come in. playlist. Go to the playlist. We've arranged the nice for you. So financial reporting in here. Just tap on it like this. Then go to preparation of financial statement one. Preparation of financial statement. Go and show yourself. Can you show yourself? Can you show yourself? And I not understand though. Preparation of financial statement inside. Let me not see to. Let me do it like this. Okay, so all of them are in there. Okay, so you can see the preparation of financial statement. In fact, it's in there when you search at your when you search it in, you will find it. So that's the host here. So let's search it here. Preparation of financial statement. Preparation of financial statement. Preparation of financial statement. Enter. For me. So in here, so that way I can get the channel or here. So all of them are in here. Preparation of financial statement, illustration with introduction to footnotes. The footnote where we will add note 1, note 2 in that order up to the end. Yes, it's good. This is the channel. So when this is how contain all the videos on the preparation of finance. Wow, in order. It works from here down, all the 9 videos, then you are done. So can you do that? And then be sharing it and make sure that you turn on the notification button and those stuff so that you can receive notification. Okay, so thank you done for can you subscribe if I'm not done that, and let's keep the learning going. So thank you very much for coming. Very nice day. Well, you can also navigate through this material. So now we are here. This is where we are. So today, what we have gone through, everything is in here. So now quietly go to part 2. I've written the footnotes and then the IESs, and then the IES will continue like that. And then we now enter into fully solved one. And you have alternative videos that you can also use. So you can use this one. From there, you go to cash flow. All of the videos are available for like you can even just use 2 weeks to finish everything. Go through them, all of them. Financial position, interpretation, ratios, plenty, extremely plenty. Business reorganization, capital reduction, all of them are in there. So let's make use of it. And then this is the 4.